Good afternoon, guys. It is 2:48 on Thursday, the 14th of March 2024. It's a wet day outside, but nevertheless, we are currently at year one, week 49 in what will be a roughly 8-year fire journey. And, the market has run away with it, judging by the look of things on the screen there. It's been 10 days or so since the last live stream. It's just the way things fall. I only stream whenever, I try to only stream whenever the market is open, so that rules out weekends and bank holidays. But today we have got the market open, and we are also in the window, if you like, for a bit of back and forth between the US and the UK. US markets should be open as well, and let's just have a look and see what there is to say about it. Actually, just to draw your attention, you may or may not have noticed the little green thing at the top here. It says switch to new app beta, so there must be a new view available. I did have a brief look at it on my own account. I'm not sure what the intention is with that. To be honest, it looked to me rather a sort of simplistic view of things, and I prefer the view that I have. That green button there, in fact, it kind of looked a bit like a mobile view of the data, and as I say, I prefer the slightly more detailed overview, just so that you can see everything kind of in the one place. Guys, just a quick look, see where we are currently at. So current market value 76.55, down 0.1% today. Market open currently, we currently hold just over 186 shares, currently worth 14,300 odd, and that's up almost 18%, and that's with an average price of 64.92 per share. And there's the current price again. So in terms of the stats, as you can see, all but today's slight pullback in the green. As I say, the market has pretty much run away with it at this time. Let's just I just want to kind of go back a little bit just to see, to have a look, if you like, at what happened in the past, in terms of periods of growth or recovery, or whatever you want to call it. I mean, this is the COVID effect here. This was February and March 2020, followed by a V-shaped recovery in May and June, July even, and things were back on track again by about the end of August in 2020. But if you look and see where things go from there, we had a constant upward trend, so from £47.61 all the way up to £56.60. And I think you'll find, if I had just actually put a horizontal line there, I just really want to mark that point, because I think you'll find that although there was pretty steady constant growth up to that point, I'm not sure that there was ever a pullback beyond that point. So there's the line. Let's select it and move it along. This is very approximate, of course, but I think it serves to demonstrate the point. So yeah, there you go. You can still see the line on screen there. So all the way from August, well, that's April. Sorry, all the way from April 21 right up to the current day. Although the market value had increased significantly by near enough £10 per share, it has never looked back. So at the same time as at times you'll hear me say that I'm pleased to see a little bit of a red candlestick, that's well and good, but that's no guarantee that the price is ever going to return back to the level it was at before. And I can understand that in people's heads they could well conclude that, well, if the market is taking off like this, that maybe rather than investing their money now, they might be better to wait until there's a drop in the market, a pullback. But as I say, as we saw from back here, although there was a constant upward trend and growth, so far at least the market has never come back to that level, and in fact we could see the same here with this upward trend and indeed growth. As I say, I expect that there's a possibility that the market could move closer to the historical trend line, which I believe is where the fair value is at. Going by my very rough calculation, fair value today should be in around about £93 a share, but the market is currently sitting at 76. So, with that in mind, does this look unrealistic? Actually, no, it doesn't. It could well continue into the future. Should you hold off on your investing? Absolutely not. You may never get such a good price again. So guys, that's just to sort of dispel any myths that there might be out there, or any doubts that anybody might have in their head. You are never guaranteed the current price ever in the future. Price is always changing. It could go up, it could go down. Nobody knows for sure, and the best way to invest is to invest consistently, and quite frankly without regard for what the market is doing right now. You will dollar cost average in whatever direction the market is moving at the time. So if the price of the market is higher than your current average purchase price, then you will dollar cost average up the ways, and your average purchase price will rise with each additional investment. Conversely, if the market has fallen below the price you had previously paid, well, you will be able to bring down You will be able to dollar cost average in the downward direction by investing more money into the market. With that said, guys, let's get on and buy our weekly £120 of stock in the S&P 500, shown here on the Trading 212 practice platform. The practice platform gives you 50,000 theoretical pounds to invest, and as I say, at a rate of £120 per week. That's going to take a total of roughly 8 years to complete. We're currently nearing the end of the second year. As I say, £120 in the Vanguard version of the S&P 500 is going to buy us about 1.57 shares. And Vanguard, because they are the broker, if that's the right term, that seem to offer the lowest fees for this type of exchange traded fund. So guys, as you can see, this is a market buy. It's going to go through at whatever the price is for execution at the time. It's not going to wait for a specific price point or anything like that. So we bought 1.56 shares for 76.49. I think that was actually slightly better than predicted. And indeed, yeah, you can see that the market has actually pulled back by 1/3% for today so far now, in comparison to the 1/5% when I began the stream. So that transaction has gone through. The figures have updated. Let's have a little look at the notifications. Now, I don't know what this refers to, but Alibaba seems to be being investigated by the European Commission for illegal content. Alibaba, so far as I am aware, is a online retailer, maybe more correct to say an online wholesaler, and I'm curious to know what is being alleged here, or indeed is anything really being alleged, or is it just another way to cast aspersions on the Chinese, and quite honestly, that appears to be something which is almost becoming a national sport in the UK and the US. But no doubt if there's more to know about that, we'll hear about it in due course. Sidelined Sentinel-1 slides 11% as weak guidance outweighs upbeat quarter. I haven't heard of Sentinel-1, so moving on. Robinhood. So Robinhood is, I would say, a rival to Trading 212 pretty much, although I think they appear to have more to do perhaps with cryptocurrency than a lot of the other trading platforms. So it says here, Robinhood soars 11% on a jump in custodies assets amid retail trading resurgence. So I'm not actually sure what they are getting at there, but it sounds to me as though enough people have confidence in Robinhood that they are willing to leave money on the platform, even if it's not necessarily invested. I think that's kind of what we're talking about. Not 100% sure. OSB Group down 19% on weak guidance amid mortgage weakness and funding costs. So that sounds like some kind of a real estate operation. I can't say I've heard of it, but That's quite a drop, 19%. TRN Trainline up 11% on sales beat and improved guidance as ticket demand rises. So good news for them. Biggest stocks before earnings: Dollar General, UiPath, SentinelOne, Canadian Solar, Dick's Sporting. McDonald's down 3% as the Chief Financial Officer warns of slowing international sales. 3% doesn't sound an awful lot, but at the same time, consider how big a company McDonald's is. And actually, that's significant enough, probably. Dollar Tree drops 13% on disappointing results and near 1,000 store closures. Zalando rallies 12% on buyback plans after forecasting return to growth in 2024. Adidas declines 3% after posting a loss for the first time since 1992. I honestly haven't bought trainers in quite some time, and the trainers that I would have bought the last couple of times that I have bought them would be ones that are on the cheaper end of the scale. I am certainly not somebody who pays extra to have a fancy brand name attached to a product, and I wonder if Adidas have become victim in a sense of their own success in that regard. But anyway, that's for them to figure out. Balfour Beatty soars 9% on a 100 million buyback program, fueled by rising revenue and profit. So a good rise for them there. So every now and again I like to have a little look just to see how the portfolio is performing compared to the forecast, and I will do that. I will do that shortly. But before I do that, I just wanted to draw attention to the free shares offer, which is mentioned in the title and indeed in the description. The link for the free shares offer should be in the description. In order to avail of that, you need to create an account. You need to put money into the account, and I believe you need to buy some shares with it. But if you do all that, both of us could benefit from shares up to the value of about £100, if I'm not mistaken. So it's something worth bearing in mind. I would suggest, if you were interested in as you might say, getting your feet wet. And as I say, that offer is open for the next 33 days. What I would say is that I don't think anybody should start investing on the basis of an offer of free shares. I think you should do your research. I think you should consider all the various platforms and offers that are out there and attempt to find something that fits your own taste, as well as obviously your own investment needs. Personally, I like Trading 212, that's why I use it. But you could look at the other options available, and you might choose to go with them instead. However, in the event that you do decide that you like the format on Trading 212, and you would be investing with them anyway, sorry, let me rephrase that. You would be opening an account with them anyway. Can I suggest that rather than doing that on your own, that you please make use of the referral code in the description for this video. And as I say, that way, when you fulfill all the conditions that will be detailed for you when you follow the link, that way we'll both be able to get some free shares. That certainly would help me towards my FIRE journey, and hopefully you as well. So guys, as I say, let's actually just look and see what is this rise here that we're talking about. So I'm just trying to see where was the previous highest point. So it's about there anyway. Oh goodness. Okay, so just at a quick look at that, there's actually 2 or 3 instances where the prices are roughly about the same, in around the £68.80, and from that point, £68.80, the market is now sitting at 76. So 68.80 was in September last year. So in this space of, what is that, 6 months, roughly, in the space of about 6 months, we have seen a rise in price of, what did I say, 68? Yeah, 68.80. We're now at 76.46. Let me get my trusty calculator. So according to my trusty calculator, 76.46, 68.80. So in the space of about 6 months, the price there is up by around about £7.60. There's a new notification. Actually, it just popped up there as I was talking. This is about Under Armour, which are the underwear manufacturer, I suppose. Under Armour drops 13% as CEO shakeup signals strategic deficiencies. I'm going to leave that like that because I'm not aware of what's going on there. I haven't heard anything else about it. So yeah, as I was saying, in the space of about 6 months there, the price point has gone up by, what was it, £7 something or other. As you can see, that equates to 11 and a bit percent. So let's just have a compare with the forecast that I had done previously, just to see where we are currently at and where we should be, normally speaking, at this point in the journey. So current portfolio value 14,400. Let's switch over to the website where I have all the information. So just to show you how to get there, the website actually is at soft.uk.free.fr. So once again, it's soft, soft, dot free, free, dot fr. So once again, it's soft, yeah, sorry. Let's take it from the top. Soft, S-O-F-T, dot UK, dot free, dot fr. And if you enter that, you should arrive on this page. It's difficult to make out, but there are 5 links on the left hand side, and the one that we want is the resources link. And within the resources link, you should see about 5 lines down from the top, Fire on Band 2 XL, and there's a video as well. So if we click on the Fire Band 2, that should open the Excel spreadsheet. Then what we want to do, I haven't, it looks as if I haven't, I don't know if I have, but it looks as if I haven't actually named the sheets at the bottom. The one you want to select is sheet 2, because that gives us a year by year model effectively of the amount invested, as well as average expected growth. So the first year is actually called year 0. So obviously that's complete, and now we are on year 1, and as I say, we're at week 49. So the weeks are listed down the left hand side here. So let's scroll down to week 49, which is here. And if we look across for year 1, just trying to see if I can't make that a little bit bigger, but I can't. So week 49, year 1, the expected portfolio value at that point is roughly 13,500, and theoretically the portfolio for the month should grow by roughly £26 with that amount invested. Yeah, so we have largely surpassed that. So if you just remember the figure here, 13,500 for year 1, week 49, 13.5, and rather than 13.5, you can see over here we've got 14,400. So the figure that's modeled is actually lagging behind the reality. Currently the market, I would say that currently the market is in a recovery phase, and consequently it doesn't surprise me that the market is currently doing better than the projected forecast. I think that is entirely normal and entirely to be expected, but it is interesting just from time to time just to refer to the model, just to see whereabouts we are on that. Guys, with that, I'm going to call it a day for today, and wish you a lovely end to your Thursday. Thank you for watching. If you find the content informative or interesting, and you're interested in following the journey, why not hit the subscribe button? And obviously if you liked this particular video, please give it a thumbs up as well. Thank you for watching.